Good morning or good afternoon, wherever you are. Welcome to the halftime report here on a Monday morning to start a abbreviated trading week, Thanksgiving week. Markets closed on Thursday, only open for a smidge on Friday. Always interesting price action. We'll get to that to a second. Before we get started, I just want to highlight that we are having a swing trading webinar, Matt, tonight here on YouTube. Good morning to you, Matt, and tell us a little bit about that.
Well, yeah, we are having a swing trading webinar here tonight on our Tackle Trading YouTube channel. I will be teaching that swing trading webinar, and hopefully we can get a lot of people to come hang out with me tonight as I navigate the world of introducing people to the art of swing trading. We're going to talk about support and resistance tonight. We're going to talk about what creates support. We're going to talk about trend analysis. We're going to go through pattern recognition. We're going to do a couple case studies. And then at the end of the webinar, I'm going to talk to our community about our typical annual holiday sales we do here at Tackle Trading, where we discount a lot of our premium products in our Tackle Annual and so on and so forth. So for our pro member community, I'll be laying that out tonight as well. But for the most part, Chucky, we're going to have a lot of fun talking about swing trading tonight and going through the art of introducing people to really the three-step process that I like to do from an educational perspective. Really identifying trends. What is a trend? Identifying pattern recognitions within trend, and then ultimately identifying where those key levels of support and resistance are to know when we want to get in versus when we want to get out. And we're going to have a lot of fun tonight. I plan on a little bit more than an hour tonight, maybe up to about 90 minutes, I would say tonight. But going to have a lot of fun. Hope to see a lot of the pro members there. And obviously, we're looking to educate some new potential members of our community at Tackle Trading as well. So going to have some fun tonight.
Swing trading has been extremely profitable over the last 5, 6, 7 weeks. I mean, it's just been a great stretch. And learning how to identify when those stretches can occur and the signals that can generate them, it can lead to a well worth your investment of time. Absolutely check that out tonight, 8:30 Eastern, here on YouTube, right, Matt? Just Tackle Trading.
Here on Tackle Trading's YouTube channel,
so
yes,
if
sir.
you found the halftime report, then you can find the YouTube webinar, Swing Trading.
It's a stone throw from the halftime report.
Yeah, so like if you're here watching this, you've already made a huge, gigantic stride to being able to find that swing trading webinar tonight, 8:30 Eastern. And Gino, good morning. Listen, you are on the lounge. One of our most enjoyable, well-received products that we have in our pro membership offering at Tackle Trading is the Traders Lounge. You had some nice little trades that are on the Traders Lounge. So good morning to you out there on the left coast, Gino.
Yes.
And tell us about that lounge this morning.
Yeah, so I really enjoy the lounge, Mark. And I really enjoy Thanksgiving week. This is my favorite week of the year, I think.
Theta giving, bro.
Yeah, theta giving, building up that theta and just expanding my theta, getting it real positive and big like I'm going to do to my stomach on Thanksgiving Day. I'm just going to overeat and just, enjoy it. Time with the family. But what's nice about Thanksgiving week, Mark, is a lot of people take time off this week and the lounges are full. Our classes are full. So we have some great content. And that's one of the reasons why Matt's doing his class tonight. So, hopefully everybody catches that. That swing trading is awesome. But in the lounge last Wednesday, we put on some of my famous trades, my butterflies on Apple and NVIDIA and those kind of things, cheap little trades. We did a $13, 13 cents a share butterfly on Apple. And we did a couple different butterflies on Wednesday. I'm always doing trades in there. And we followed up today, which is 4 or 5 days later, cashed out for 160 roughly around there. So it was like a 12-to-1 risk reward. And we placed more. So hopefully you caught those, practice them, advanced strategies, and I just love low risk strategy. We also did some cash flow on the VIX, some VXX, and some cash flow strategies and portfolio protection strategies that are already profitable. Now, guys, I want to finish by saying that and turn it back over to Matt and Mark. But on Gino's Gems today, I'm going to show you a VIX trick. Tricks with the VIX. Vicky Tricky, whatever you want to call it.
Vicky Tricky.
Yeah, Vicky.
Tricky.
I like Tricky Vicky.
Tricky Vicky. Oh yeah.
Tricky Vicky.
He's an animal.
Vixie.
Listen,
whatever we call it.
Somewhere.
Okay, now we're getting silly.
Yeah, we'll get somewhere. I will tell you though, Gino, two things very quickly. Very few traders have I met that can get more creative in the options market than Coach Gino Poor. Just like literally, he's done things in front of me that I'm like, that's not a strategy, but that should be a strategy type thing. I mean, he's the original option trader I was watching when I was like, option traders just click on buttons until a risk graph looks good. And then Gino's like, yeah, that's what I do. I just click buttons till I like the risk graph and then we're good.
Creative.
He was also the first guy about 10 years ago. I'm sitting there talking to him and I was in Los Angeles, California. And me and Gino were sitting there talking in front of, I don't know, probably 40, 50 people and just talking about the markets and we're hanging out. And, you know, it's approaching Thanksgiving and I'm teaching the concept of theta targeting. And theta targeting is basically a concept where you identify your cash flow needs and you sell enough options to generate, well, actually you sell much more options than what you need because of probability and whatnot, but you theta target your desired cash flow needs. And I was teaching that concept and, you know, I was talking about how basically at first you're getting 10, 15 theta a day, right? I mean, it's not big, it's not life changing, but then Gino's like, yeah, but you know what it did for me? It paid my car bill in 1998 is what it did. And then it paid my mortgage 2 years later. And he was talking to me about how that was building over time. And I said, Gino, well, what's your theta number today? And I'm not going to give it today because that's private, but he showed it to me and I'm like, my jaw literally just dropped. And I'm like,
it's pretty decent.
Oh, wow. And he's like, oh, Matt, you got to realize I try to stack and this quote, this is what Gino says to me 10 years ago. I try to stack theta because while you're eating turkey this weekend, I'm going to have a theta giving, bro. And about 10 years ago, Gino said that to me, and Thanksgiving has been theta giving week from that moment on. The great Gino Poor started it. So that just came to my mind when Gino was telling that story. And he also mentioned calendar spread, guys. Well, we got, for those of you who knew, we got something called the Tackle Trading Playbooks for our pro members. You can go over there and click that and understand what Gino's talking about from a butterfly perspective.
Yeah. Also, Matt, you know, real quickly that you said that, the reason I like Thanksgiving so much is that's the one day I can predict. That's the one Thursday I can predict what the market's going to do.
It's true.
Well, you know, and the thing about it is Friday is usually, I mean, it's funny when you get to selling options and learn.
Well, hey, Chucky, very quickly, can we just identify the market hours this week for everybody? Because
you know, I don't know. I know they're abbreviated on Friday.
We got normal business, so a very, very short week here this week. We got Monday, Tuesday, and Wednesday, active trading, active everything. Thursday, everything is shut down. We got abbreviated hours on Friday. We do close down a few hours before the normal closing. But I'll tell you guys, like not a lot of volume on Friday. You get some weird price movements on Friday, though. Not a lot of volume on Friday. Most people are watching football, sleeping off the Thanksgiving food comatose, but not a lot of volume. But for the most part, this week it's Monday through Wednesday this week. On Friday, guys, we will be taking Friday off at Tackle Trading. Everybody enjoy a great Thanksgiving, but for the most part, this week is Monday, Tuesday, and Wednesday. All economic reports are stacked Monday, Tuesday, and Wednesday. And so, for example, Mark, you know, whereas last week we didn't get a lot of economic reports, this week you'll just notice this week the reports that would have came on Thursday and Friday, they are all stacked on Wednesday. So you could maybe see a little bit of more volatility, I would say, on say Wednesday, given the fact that you're getting the preliminary GDP report, which is the second report in the GDP series, durable goods, the big dog, the PCE report, which is the inflationary report, and which is most likely the number one inflationary report that the Fed looks like. And so you're going to get a lot of economic analysis, especially on Wednesday. So I just wanted to talk about that as we talk about Thanksgiving.
No, I mean, Wednesday, you know, the Fed meetings at the end. Listen, we'll be here for you all week long at the halftime report, except for Thanksgiving. I mean, we're going to take Thursday and Friday off, but we will be having the Traders Lounge for pro members on Friday morning.
Yes. I'm just talking halftime report.
Yeah, so Friday morning, we're still going to have the Traders Lounge. That heathen Canadian.
So
Greg
let
Holmes.
me be specific then. I'm taking Friday off. You guys have fun.
Well, we have
fun.
our resident Canadian Greg Holmes will be teaching the Traders Lounge on Friday, but we'll be active on Discord checking in.
Because they don't do the same kind
Their
of thing.
Thanksgiving is like 2 weeks ago.
Yeah.
Or 3 weeks ago or something like that.
Yeah,
listen, all right. Let's get down to market action. Really interesting market open today.
It's fascinating.
Tell us what happened on the market open. Break it down on intraday chart, daily chart, whatever you want to do, because it was really interesting.
Yeah, technically, and I'm going to come down to the 15-minute chart. Technically, it was a fascinating last couple hours in the marketplace. You had some really, really rapid and quick price appreciation, and not even on the cash open. It was about the hour before the cash open in that 5:30 to 6:30 my time frame, 8:30 to 9:30, because I'm on the left coast as well as like Gino is. So when you're looking at that cash open was actually right here. A lot of that front running coming in, and it wasn't really even futures driven on the overnight mark. A lot of times we'll get some, Asian news or some European news that comes out before the U.S. markets do open up, but that wasn't really the case this time. You see kind of the muted response from the futures open over the course of the last 24 hours. And then it just right here starts going to gangbusters. And you did have a little bit of news that came out, and a lot of that news is the speculation has now been confirmed on Jay Powell. Jay Powell is going to get a second term to run the Central Bank of the United States. Lael Brainard is going to be the vice chair person for the central bank, and that was kind of speculated on and came in to be accurate, that Jay Powell is going to get another term as central bank president underneath President Biden. Brainard is going to get the vice chair role, and that's interesting because whereas Brainard is the only Democrat on the Fed, number one, she's also seen as a little bit more progressive on things like crypto, on things like climate change, on things like financial regulation. And so it's going to be interesting how she goes about shaping and influencing the Fed, because guys, when you're named the vice chair, that's a stone throw from the real chair, right? I mean, think about it wasn't really Jay Powell, but think about Janet Yellen. Janet Yellen was vice chair of the central bank underneath Bernanke for years and years and years before she finally got the tap and the nod to become the chairperson. Same thing with Brainard here, kind of that second in charge at the central bank. So it was widely speculated that Powell was going to get a second term. There was some opinion out there that Brainard might get that. That looks to be pushed down the road a little bit. It's going to be interesting to see how she shapes and influences the Fed. But as of now, you got a dove running the Fed, and you got about 8 more doves saying yes to the ultimate dove. So it's going to be interesting to see how that goes about the next 6 months. But that was the news that kind of sparked this volatility, and you saw that volatility drive up immediately on the cash open, right back down. And then when you come out to a daily time frame, it doesn't look like much of anything has occurred, because quite frankly, outside of the hour before the cash open and the 30 minutes after the cash open, not much has occurred, quite frankly. And so a very volatile cash open. And when you're looking at the volatility in the S&P, I just want you to think about the volatility in the things that aren't in the S&P. These are the biggest stocks in the world. Think about what's happening in some of the underbelly here. And Mark, we call it the underbelly. That's what we refer to these stocks as. You coined it. What does the underbelly mean in general?
For me, the underbelly means high volatility.
Okay, so we're to some extent we're talking the ARK index, right?
Yeah, I mean, and I coined this phrase late last year, early this year, like when we saw, just robust trading conditions in SPACs, in IPOs, in small caps, in, the Palantirs of the world, the SoFis of the world, basically when I talk about the underbelly, it refers to high volatility. Now, most high volatility stocks are, can be associated a lot with like ARC type stocks. Not always, right? But I just use the ARC as a gauge because you're dealing with higher volatility in these names. And so when I say the underbelly, I'm talking about high volatility stocks, right? Now, every once in a while, a blue chipper can find its way for a few weeks into the underbelly just because volatility jumps up so high that it might as well be in the underbelly. Mm-hmm. But when you have high volatility stocks, guess what occurs? High volatility.
They go up and down very fast. Yeah.
And that's essentially the reason you're getting like why options are so expensive in the underbelly is because the ability to move up and down really, really fast, big percentage moves. Matt, it is, one of the biggest differences between trading for me now and, even 3-4 years ago, the amount of names that will go up 7, 8, 9% or down 7, 8, 9% in a day. It's amazing.
It's a lot more today than it once was. There's no doubt.
Yeah, it's almost like we've gotten accustomed to it. Like when we see PayPal down 8%, we're like, oh, okay, right. 3 years ago, that would have been like, oh my gosh, PayPal's down 8%. What does that? We've gotten so used to it. But high volatility, you can have big swings. Just look at the ARC, right? Just look at the ARC in the last month. Huge run up. Huge sell down, right? Now, there are awesome ways to trade this.
Well, and in the ARC, there's some big time stocks in the ARC index too, right? One of them is Tesla, one of the biggest dogs of them all. But you're talking about an index that literally has driven upwards 15%, downwards 15% from an index perspective in a month. That's the literal definition of volatility, the speed of movement both up and down. And because of the speed of movement both up and down, a lot of traders like selling options in this space because of the extremely high premiums that you can receive from a cash flow perspective. But a lot of times, Mark, we'd like to see some degree of consistency here while you're also simultaneously taking advantage of the high volatility. Right now, I don't see any consistency to the upside. I see a lot of price projections to the downside. I see some of the market, turning, not some of the market, I see a lot of the market turning over. And like I said, when you're looking at the S&P and you're kissing it up against an all-time high and you've had a volatile shakeout from a cash open perspective, the volatility is going to be off the charts in the loosely termed underbelly, which we're just looking at the ARC index as an example of that. But when you're looking at that, you're threatening a fairly important breakdown here where there's no support until about 100. And then when it breaks through 100, if it breaks through 100, there's not a lot of support till you really get down to 80 by 70. This is an area of the market that can be fun to play, can be exciting to play. But right now, I think it's like hot stove, stay away type scenario.
Absolutely. Like I have my lowest exposure. Listen, I respect support breaks on ARC. Like when you go back just the last year, when you've broken short-term supports at different time, you can have some pretty swift downward movement. And it's fun to pick bottoms, right? But it's really, really hard.
Well,
and it's a fool's errand.
Yeah, and very quickly, you don't try to pick a bottom on the most volatile area of the market.
That's just what I was going to say.
You let Marty the elephant take a nap on that trampoline, and you let him get
and you're
back
just
to being excited.
There's no reason, and this is one of the things that Matt, I'm sure we'll go over on some levels on the swing trading class tonight, is that you wait for patterns to develop, and if those patterns develop, great. If they don't, that's fine. But we don't pick bottoms, regardless whether it's the ARC or whether it's PayPal or what. And every once in a while,
I give an example of that, Mark?
Absolutely.
I would absolutely not be looking, and this is me, and I'm talking from a swing trader perspective, not from an investor, because obviously when an index or an ETF that you track is at the low price over the last 6, 7, 8 months, individual stocks are going to be even worse than that. Would you agree with that?
Oh, absolutely.
Right. So there could be some opportunities there. I'm not making a broad statement from an investor perspective. I'm talking from a trader's perspective. From a trader's perspective, Chucky, and I'm actually going to talk about this tonight, right here. You see this investors versus traders, what investors look at versus what traders look like. or what they like to look at from an analysis perspective. That's actually a discussion point I'm going to have tonight. But when you're talking about that picking up at the low price on something like this, a trader, I'm not interested. And I'm serious, as a trader, I'm not interested in anything until that level is destroyed. Like nothing. I don't care if 110 holds. I don't care if it goes down to 100. I literally could care less. I could care less. Until this begins a bullish uptrend, there is literally nothing to see here. Until you see some degree of prolonged bearish downtrend followed by a reversal, there's nothing to see here. And again, I'm talking as an active trader. So as the active trader goes, it's like, so who cares? Why are we looking at picking up low point stocks at the low point as a swing trader? That's not what swing traders look to do in any capacity. And so this is a nothing burger for me, especially, and again, more as the active trader goes. Now, selling options, that's a different beast. But for me, you're looking at a potential breakout on the all-time high in the S&P. You're looking at Apple, Microsoft. Give me a Taiwan Semiconductor that is not kissing up against the lows. A perfect example, Mark. I said I wasn't interested in the ARK, correct? Because of where it was. Well, the ARK was doing the same thing that Taiwan Semiconductor was doing for months and months and months. The difference is ARK is here, Taiwan's here. Why do I like it? Taiwan's breaking out, starting a bullish uptrend with a series of higher highs, higher lows. ARK has no theme to it, is fighting for life support at 110 support, and the only support underneath that is all the way down to $100, which means a lot of the stocks in the ARK index get absolutely crushed if that support gets violated. It's just a matter of understanding trend analysis as coupling with pattern recognition. But for me, the ARK is a complete stay away versus something like a Taiwan Semiconductor has to be looked at from an active swing trader perspective.
No, it's. I mean, this is the type of stuff. Check out that. Even if you've been around, repetition in learning in the markets is such a powerful aspect. Check out that swing trading webinar tonight. Matt, run us through some of the other indexes here.
Yeah.
It's just fascinating because somebody's portfolio might be, depending on where their position been, like, oh my gosh, I'm under pressure today. Most sectors
if they're over positioned in the ARK, yeah.
Or just, or whatever it may be. Most sectors are pretty healthy out here. And that S&P chart still looks really, really healthy, doesn't it, Matt?
If you're positioning to where we rank things in the S&P, there should be no concern here. Quite frankly, I mean, you're looking at a fairly bullish environment in the marketplace. You're looking at a fairly consistent bullish environment over the course of the last 5 to 6 weeks. Yeah, we absolutely have hesitated toward the high points, but you're now threatening another breakout in the S&P. And then when you look at some of the other indexes, a little fade action on the Dow Jones, testing a very, very important support zone right there at the old resistance pivot, new support. Let's see how that plays out this week. When you're looking at the NASDAQ very quickly, the strength of the market right now is in the NASDAQ. It's in discretionary, it's in technology. We'll talk about that when I rapid fire kind of the rankings at tackle trade, the rankings for our sectors at tackle trading. The NASDAQ here, maybe a little bit overextended, I would say. Maybe we see a little bit of consolidation this week with the short week, but overall some bullish flavor of the month there in the NASDAQ. And then when you're looking at the Russell 2000, this is the one index this week that I think I'm interested in technically a little bit more. Don't get me wrong, I like the S&P breakout, the NASDAQ a little bit overextended. Don't love the fade down violation of support against the Dow Jones, but it's in an interesting pocket of support against the all-time high breakout from a couple months ago. That's interesting. But the one that really is interesting to me in terms of pure bullish retracement analysis, a little bit more of those standard pullback analysis, is the Russell 2000. We talked about it all last week about how this zone, that zone between 2300 and 2350, 2360, that old breakout zone. And let me take away my drawing set there and let's just kind of look at that one zone now that we're talking about. That zone right there, the old breakout zone, you're now in that zone. And that's, for me, I say this all the time. I'll say it here though. If this breakout was legitimate against the backdrop of that consolidated neutral marketplace over 10 months, this has to hold here. This has to hold in this zone, because if it doesn't, the confidence level of traders is going to go out the door and they're going to go look somewhere else. I guarantee you. What if something fails at support, do traders stare at it, Mark? No, no. We want to get it out of sight, out of mind as fast as we can. And so you're at an interesting zone.
When support breaks, well, you might stare at it for a second, being like,
listen,
insert expletive here.
If I'm fly fishing on the river and the dam in front of me breaks, I'm not going to stare at the break. I'm going to run.
Well, dude, you might stare at that break for like 2 seconds, being like, "Oh,
that's interesting."
Expletive, and then and then you get to action really quick.
Yeah,
right?
Mark's like, "Hey, Matt, break. What should we do? I don't know. Should we wait for confirmation?" No, run.
No, I mean, listen,
run.
you learn to act on support breaks as a trader, because, like, listen, there's lots of money to be made in swing trading, but part of the art of trading in general, just not swing trading, is learning to recognize signals that require action. You know, like either I buy it on the signal, I sell on the signal,
that's one of the things I am going to talk about here tonight, is making sure that you do have confirmation, because I love the zone here. Right. I think you got to love the zone the Russell's in right now. Again, if the breakout was legitimate, this support bounce is going to be legitimate. It's the first support bounce you have in this breakout. It's the thing that Mark, it doesn't only confirm, and that's why confirmation is so key right now in the Russell 2000. It doesn't only confirm the bullish retracement, it actually confirms the breakout as well. Because of the placement you're in with this retracement, it's very important. Where could that confirmation come? Confirmation can be some degree subjective, but when I'm looking at confirmation, I like to look at the trend lines in the downward movement, couple that with your horizontal resistance levels. And so when I'm looking at this from a confirmation perspective, I like the consistency of that downtrend right there. I like the consistency. You see that resistance? You see it just hover, 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 hover. You see that trend line. It kind of coincides with the 50-period moving average on the hourly chart. You see the volatility. Look at the volatility coming in. It fought through that, but it could not get above the horizontal resistance line. And so I like to look at a little bit of combination from that trend line coming downward, making sure that we puncture back up above it. We did that before the cash open here today. Cash open came right back down. Now we got some levels that we can really kind of identify. And the level that I'm looking at is this old pivot point, the new high of the day. You see that confirmed right there. And then the second one, which would be more secondary confirmation, is still that 2380 level, Mark. I talked about it on later on into the week last week. I like that 2380 old support over here, kind of in that zone over here, acted as new resistance multiple times. So you got an aggressive confirmation, and let me get you a number on that one, Chucky. You got an aggressive confirmation above the high of the day, give that 2373. You got more conservative confirmation above 2380. And when you're looking at the strength of this dip here over the course of the last couple weeks, it tried to fight up here. I think you act a little bit more conservative. Let's make sure that we see that close above 2380 for confirmation, but you're in the zone, and I think that's very interesting.
I love trading. I love technical patterns. And listen, and the thing about small caps here, seasonality, small caps, and if you're a small cap trader, I'm a huge small cap trader. I love them. I love researching the little companies. I love the volatility. I love the price movement. Seasonality, small caps do extremely well in December, January. If you're a small cap trader, you remember last December and January. I don't think we're going to have that insanity happen again, because that was just a print money like it was nothing, period.
That was Santa came to town, and Santa brought trillions of dollars in stimulus with him. and and put it in planes around the United States, and then just did what's called a helicopter drop, where we were dropping cash on America. That's what that theme was last year. And not only that, but you had the vaccine being released.
It was a good
the
stretch
economy
for small caps.
reopening. I'm with you. I doubt we're getting that stretch.
I doubt we're getting that again, because that was insanity. But listen, you find a little support here. You get a signal here. It's a good timing for a pullback, stability, signal, upward movement. Good timing heading into a very seasonally strong period for small caps. Very interested in it. Matt, let's go around to some of that. Listen, crude oil.
And one last point on this, technically, Mark, you see this, the last 2 days, where did those intraday resistance levels come in? Right there on the daily 9. So keep an eye on your girlfriend there, Chucky.
You got a few days to let this
relabel
play
your
out.
girlfriend from Janet.
Janet, oh Janet.
Apparently not. Apparently we're still going with Janet.
It's Janet.
I get it. It's just Janet.
But Janet's angry.
There's
listen,
people new to
we've
tackle.
got a debt ceiling coming up. Get ready for Janet to start yelling at us again.
She's kind of all over the board there lately.
All right, let's get to crude oil, Matt. Got a little reprieve on price. Last week, crude oil got hit with a double whammy of like China and U.S. working together, because I guess they don't get along on
They're not working together. Let's call a spade here.
But like strategic oil, petroleum oil. But then the big thing on Friday, where on a week chart already, Austria came out and said, hey, we're locking down COVID cases, worries that it would happen other places. You always have macro news impacting crude oil. It's one of the reasons I love crude oil so much. But now, as traders, we're looking, all right, got a little short-term downtrend. Where does this potentially stick? Now, you and I were talking about some areas where it could potentially stick before the halftime report. I wrote about oil exclusively in the Commodities Report. Pro members, go check out Commodities Report on tackletrading.com. Matt, where could, during downtrends, you're always analyzing, just like you did on small caps, where are the areas where support might stick? Where are they?
There's two key zones here that I think we need to track on crude oil, and I think both of these two zones are extremely important. So a lot of times when I'm breaking down technicals, I'm like, all right, that's a minor level of support. It certainly could adjust volatility there, but nothing to be too concerned about. These two zones I think are extremely important and certainly could attract buyers, and that's why I think. And again, one of the reasons I believe that, Mark, is I don't believe the U.S. and China tapping into strategic reserves is going to change the overall dynamic in the crude oil market. I think that's a short-term bump. It's not going to stop inflation. By the way, they're also not going to work together long enough to stop inflation. It literally is designed to just give them a headline, reprieve, in my opinion. I do not believe China and the U.S. can work together on strategic oil reserves for longer than 30 minutes. I just do not believe that can happen. Again, I see this more as headline news and thus headline risk to the oil markets. And I think a lot of these times, Mark, especially given the fact that we were neutral coming into this type of thing, it's not exactly like traders were, at least at tackle trading, it's not like traders were looking at oil at 80 and being like, hey, let's pick up oil at 80. For 3 straight weeks, we were saying there is nothing to see here. Nothing to see here. We do not care what happens between 80 and 85. There is nothing to see here. I think that's changed a little bit here. 75 is that first handle that certainly can attract buyers, especially if you believe in the inflationary argument, especially if you believe in the increasing demand argument, especially if you believe that Saudi Arabia is not going to be looking to open up the floodgates to a certain extent from an oil production perspective. 75 is that first handle you got to look at. It's the top end of the range that we talked about technically for a very long time. And you see support kind of starting to build right there, a little bit of an inside candle against the volatility we did witness on Friday. That's happening right in that same zone of support. That was the old resistance handle. Right there, you see that big number right there at 75, 75 being that significant whole number as well. That's certainly an attracting zone where support could build. But I'm going to maintain, Mark, that this is not a buy the dip type analysis, quite frankly. You got a double top, double bottom reversal at the top side, which means you have a reversal pattern coming into this bearish downtrend because you have it as a bearish downtrend. Excuse me, I'm losing my voice a little bit. That's pretty tough. That's pretty tough going into an event tonight, but I'll get some tea in me and we'll be good. You got a reversal coming into the analysis, which means you've got a bearish downtrend, which means you need a bullish reversal pattern. It doesn't have to be much, but I don't think one day is going to do the trick. We spent 3-4 weeks here at the top forming that reversal. We're going to spend a little bit of time here forming that reversal. And even if you do V-shape from 75 to 80, you're going to be met with a tremendous amount of resistance called moving averages. This one's simple to me. You're looking at support to build at 75, wait for those moving averages to contract back down. Give us a double bottom at 75 and let's rock and roll there. That's the first one, Chucky. The second one you're looking at is if 75 does fail. And if 75 does fail here, which certainly can occur, right? We got an inside candle at 75. That's not confirmation. That's not support. We're just in it's hypothetically support, meaning it's a catalyst. It can be a catalyst for support. Support's only defined by the marketplace. We haven't had enough time for it to do that yet. So that's why it certainly could fail here. And if it does, Mark, I don't think that's necessarily the worst thing in the world. For the energy market, at this point, we're stuck writing covered calls, waiting for some stabilization in that area. And if we see a little bit more downward drift, I think the opportunity could be even bigger here. I like 70. You got 70 being a significant whole number. But the reason 70 stands out to me is it's right where that 200-day moving average is. It's right in that buyer's zone from a long-term perspective. And then you're looking at just typical 200-day moving average bounce. You saw it give out a little bit here. Look at the speed here. You got your double bottom there. You got faked out. You got faked out if you picked up that double bottom because it never reclaimed resistance. Got smacked in the face. Where to come into a little bit of that zone. Didn't necessarily get down there, so it didn't act as a support, but you can see the example here. Once it gets into that zone, the buyers come back in pretty aggressive. So I think at 75, you're a little cautious. I think at 75, you're a little cautious. We wait for a little bit of slowing momentum. We wait for some reversal analysis. And again, it certainly could happen throughout the week here. But more than likely, I do think we're going to see a little bit of volatility to the downside here, Mark. A lot of the industries and sectors that energy is a part of, they got downgraded at tackle trading. There's a little bit of momentum shift going on here as well. Wouldn't be surprised to see oil break that 75 handle. And if it does, I do not think that is a bad thing because 70 stands out to me. 70 being that significant whole number and really being that 200-day moving average that has been a fairly consistent area from a buyer's perspective on a lot of long-term charts. You see the 200-day moving average work out itself over there quite a bit, but that's more neutrality. This would be more that 50-period moving average. And Chucky, that 50 period's catching up there on the weekly as well. So you got to like the zones you're in, Chucky. That zone looks really, really good at 75. You got to love the look there on the weekly chart. If that fails, I still like 70. But again, I do see this as a buyer's opportunity, Chucky. But again, I think that's got to be worked out a little bit technically first.
No, you wait for the chart.
Especially this week.
No, and the thing about it is like, listen, I love buying pullbacks. I love oil. I think the fundamentals are still there. Listen, for oil to take another leg up, I really like a sell-off here, finding stability. It's like back what we had in July, early August, where downward pressure, COVID headlines once again. COVID headlines again, pressure. And then you had that bear stop out couple days where support broke and it's like, oh no, where's it going to go? And then you had that bear stop out, came up, stabilized, and then,
Can I point that out on the chart here, Chucky? Because I think it's important. Traders were not looking to buy that.
No.
That's not traders. That might be investors, that might be cash flow experts, but that's not traders. Traders aren't even looking to buy that, Chucky.
Nope.
Traders.
It puts it on the radar.
Traders are looking to buy that.
Yeah, exactly.
Right?
No,
let me finish very quickly. Because at this point, you have a left shoulder, head, right shoulder, breakout. That's a bullish uptrend at that point. That's everything I'm talking about here, is letting all of this work out so that we can eventually get to that, so that we can enjoy that.
No, and during that stretch, listen, I know at the Cash Flow Vikings, we made some good money on oil. I know traders in different
how many
places
tackle traders loved that run in oil?
It was a really good stretch for oil trades, and it can take a minute. It's worth being patient. It's worth being patient. It can take some time. Guess what? Let it play out. Eventually, the chart comes, and then you trade it when you get those signals.
Here's the thing. Here's the difference between buying the dip for real traders versus people that just say buy the dip and don't understand what it means. Buy the dip does not mean you buy the first dip that goes up. You wait for the reversal. You wait for the reversal. You wait for confirmation. And you think about those old indicators. We don't use stochastics a lot, Mark. In fact, I'll ask you guys a question. When was the last time you personally used an indicator called stochastics?
Very years ago.
It's been over a decade for me. I pull it up on a chart only when requested by somebody who wants me to teach them what it is. But it's not an indicator I personally use, because I feel there's so many better ways to analyze overvalued versus undervalued scenarios. But stochastics was designed, and a lot of these indicators like stochastics, MACD, RSI, a lot of those traditional indicators, a lot of them were designed in the 80s, and they were all designed not to pick up the bottom. They were all designed to give up 20% of the bottom and give up 20% of the top. See, that's the thing about traders. We're never trying to pick the bottom. We're never trying to pick the top. We're trying, which means like if it's a hamburger, we're just trying to enjoy the middle. That's all we're doing.
Yep.
And so you give up the low and you give up the high, and you try to take the meat, is what you try to do as a trader in a trend.
The hamburger analogy is sticky.
I got hungry all of a sudden.
That means getting the meat of the move, right?
Listen,
I don't eat a lot of hamburgers these days, so I got hungry.
The meat of the move.
Speaking of charts that need a little time to develop, give me Bitcoin, Matt.
Well, I thought you were going to say McDonald's.
I'm not sure. I think Bitcoin might need more time than McDonald's to set up.
I mean, after
McDonald's is threatening a nice little breakout.
I just got to admit, when you said hamburger, I just typed
Hey, listen, all I know, they announced the McRib buy call option on McDonald's.
This is ridiculous. This is ridiculess.
I'm just saying, every time they announce McRib, buy a call option on McDonald's. It will treat you well. Let's go back to that Bitcoin chart. Matt,
the number one cult in the world is McRib lovers. Terrible.
Yeah, and the inflation's got them too, right? They're more expensive than they used to be.
Oh no, the McRib fan base is upset over inflation. Oh no!
Don't get me going on inflation. Give me that.
All right, Chucky, your point on Bitcoin.
Sloppy chart right now, right?
Yeah.
Sloppy chart right now. Fell little, tried to stretch it. Has been selling off the last couple of weeks. I don't know how many times China can ban Bitcoin, but somehow the algos haven't got the memo.
Like every 4 days, I think.
China's like, oh my gosh, to send Bitcoin down, all we have to do is keep banning it, But
hey, can we just all agree on one thing, guys? China doesn't like Bitcoin right now. So we don't need to overreact to every headline about China not liking Bitcoin.
But the stadium after it.
Chart's a little bit sloppy. We've broken some short-term support levels. Got downward 9 EMA coming into that rising 50 here. Stuck it on Friday, but the chart's a little sloppy right now. What do you see, Matt?
Yeah, we had obviously you got to downgrade how you view Bitcoin right now, and again, we talk about this as technicians quite a bit, but you got to learn how to recognize when a trend is over, and when a trend is over, it's because something on the bull side failed. And on that bull side, it was not the retracement, in my opinion. It was actually the breakout right here. When you're looking at that breakout there, you see that breakout here, the retracement got confirmed. It never violated anything. The breakout was legit. It confirmed, and it just got faked out and came right back down. That you don't want to see that, right? You want to see that confirm and fly. But at the end of the day, this is what happens to traders quite often. You look at that breakout, it looks legit, it confirms, it comes right back down, and then you're just, okay, bad timing. No, it was just, this happens. I wouldn't take anything more than that. This happens. Breakout, came right back down. And then when you saw the fake out, I think you got to adjust at that point, because again, the volatility shifts. Then at that point you fell everything else. And so now you're not looking at a bullish uptrend in the short term. And Chucky, in the scouting report meeting we do with the coaches every Friday, we had a discussion on Bitcoin, because I really did want to get everybody's take on it, given the fact that it was just last week where the bullish uptrend had failed for the first time in the last couple of months. And for most people, they saw this as a situation where it's stay away in the short term, interesting in the longer term, though. And what I meant by that is this 50-day moving average, right? You're still looking at the 50-day moving average. You're still looking at that acting as a little bit of support here. Let's see if that works out. You could certainly see something a little bit deeper here. I think if for the buy the dippers, Chucky, I'll tell you the number that stands out to me is 50,000. Like, that just stands out to me. And if you get something along this number here, see this number here? We're seeing the beginnings of it here. If you see something a little deeper, a little double bottom analysis right there around that 50K, right where the 200-day moving average is. Look at that there, 200-day moving average. Look at it act there. Look at it act there. There is evidence, Chucky. Evidence. 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 A little choppy evidence, but we're going to call it loosely evidence. Well, that 200-day moving average has certainly played a role here. So the 50 is interesting, but I think the 50 is still choppy. You're too tied up against those too tied against the reversal analysis. Anything that recovers from here is going to leave traders behind, in my opinion. I think traders are looking a little bit deeper here. They're looking at that 50,000 level, and that's where that 200-day moving average is. And I think that's the next. In terms of buy the dip, that's where I think the next opportunity could be.
I mean, that is exactly what I had. Listen, and the thing about it is, both oil and Bitcoin, two of my favorite areas, two of the areas that have treated me the best in the last 12 months, both have similar patient patterns developing.
They do.
And so, and it's one of the things you learn. It's like, all right, not going to get crazy. I got a little bit of exposure in both, going to cash flow through the different instruments I have, and to add to those positions.
I think it's simple for me on crude and Bitcoin, Mark. I think it's too quick to do anything right now on either one of them. I think it's too quick to do anything right now. But it's typically when naked put traders are like, I'm starting to see some levels where I can sell some naked puts. It's because you're in some zones where you like that from a technical value perspective. And technical value is all about, in my opinion, buying dips, right? When you're getting a technical value, it's because historically you've had some evidence there. I think the technical value argument starts right there north of the 200-day moving average, and not necessarily the 50-day moving average here.
Indeed. Listen, another chart that I would like to do more on, don't have much exposure, would like to add some more, is let's go to gold.
Gold.
So short term, listen, we've seen these big red candles before, right? And then we've seen various price responses afterwards. Talk to me about gold, man.
What am I going to say here? I'm trying to figure out. Okay. For the last 2 weeks, Chucky, I've been sitting here in the halftime report, and I've been saying, yeah, I like the improving technicals, but I do not see the eternal battle between gold and dollar both winning. Like, that doesn't happen ever. And day after day after day, dollar up, gold up, dollar up, gold up. About 3-4 days ago, I was in the halftime report, and I remember saying, this is the first time that gold and the dollar is behaving rationally. Meaning if one goes up, the other one goes down, right? They're divergent. That's rational. Today is another day where they are behaving very consistently against a historical understanding of what gold and the dollar have a tendency to do. Dollar, by the way, again, let me just reiterate, they're running on the same thing, by the way. Okay. Gold was running on what, Chucky? Inflation, right?
Inflation.
The scary I word, inflation. Say it 3 times real fast and see what happens. Inflation.
Dude, if you say it 3 times real fast, it becomes transitory.
J Powell shows up and says transitory. That's what happens. That's like Candyman. That's J Powell, Candyman. Inflation. Ooh, scary, spooky. Ooh, J Powell, transitory. But the point is, they were running on the same thing. Dollar up based on inflation, gold up based on inflation. Well, why the dollar? Dollar up on interest rate, combating that inflationary environment. And so I'm going to ask you a very simple question, Chucky. Do you believe in the inflationary argument that we are going through a prolonged inflationary environment?
Yes, I do, actually.
I do as well. Okay. Do you believe the Fed is going to act aggressively to combat that inflationary environment?
No, I do not.
Because have they shown us any historical examples that J. Powell has the courage of his conviction to maintain any policy?
Honest to God, and I don't even say this, I do believe the Fed is in a support has broken, and now let's rely.
The dam broke in 2018 when they tried to raise interest rates.
We're not going to do anything. We're gonna just hope. We're gonna hope.
So fundamentally, economically, you would agree more on the gold argument than you would on the dollar argument, correct?
Yes, I would.
Okay, I would as well. Short term, that might take some time to play out.
Oh, short-term price action can do whatever it wants, right?
Yeah, the reason I bring this up is because we're starting to see, and again, I'm going to come to UUP here. This is UUP, up, right? This is gold / GC. Same time frame, up, right? Well, over the last 4 days, you're starting to see these come back into some more historical consistency with the dollar up and gold down. I don't think this is a bad thing for gold. Not at all, quite frankly. I actually, this is the first time I'm starting to really like the gold chart, quite frankly. And it's a scary big red candle. It's a scary big red candle. Big red candles are like Marty the elephant to me, just coming down on the tramp. He's just bouncing. He's bouncing on that trampoline. I'm going to talk about Marty tonight, Chucky. Where's that trampoline though? Okay, that's the question. Right here. There's the trap. You got a major zone of support here. A major zone of support. Now, this is a level between 1810 and 1800 that has a really good backdrop to it. A really good backstop to it. Meaning right underneath 1800 is that 200-day moving average at 1793. Is the 50-day moving average at 1790. I like this zone of support for a couple reasons. Number one, I do not believe that the Fed, this movement here, from the dollar going from 25.24 to 25.87, that might not seem like a big number. That is a massive movement for a currency. A massive movement for a currency. I don't believe the Fed's going to actually raise rates nearly as much as the market does right now. I've said it many times over the last 6 weeks. This is not Paul Volcker's Fed. This isn't even Alan Greenspan's Fed. Greenspan would have raised rates, not even cared. Greenspan would have raised rates in December of 2018, and when the market puked, he would have said, stop acting irrational. That's what he would have said. He wouldn't have cared 2 seconds. I'm not even sure Ben Bernanke, the biggest coward I've ever seen run the Fed, would have capitulated the same way Jay Powell did. I know Janet Yellen wouldn't have capitulated the same way. She just would have went out and said, there's never going to be an inflation. There's never going to ever be a recession again. Jay Powell capitulated in a moment. And so I do not believe this edition of the Fed has the courage to raise interest rates to combat most likely the biggest hurdle they've ever been faced with from any economic perspective. Bear markets, that has nothing on inflation. Economic difficult times has nothing. It's a candle in the wind compared to what hyperinflation can do. The Fed They're still relying on transitory language a year into increases in inflation. They're asleep at the wheel. They lack transparency because they have no plan to actually combat inflation. That's what's happening. And so this market that believes that there's going to be 2 to 3 interest rate hikes and that the Jay Powell-led Fed is going to miraculously just apply a mandate that the Fed applying for the last 5 years is not going to happen, in my opinion. And so I just disagree respectfully with all the other traders who believe we're going to see 2 to 3 interest rate hikes next year unless the environment changes. Well, if you believe that you have an inflationary environment and the Fed isn't going to raise interest rates as aggressively as the market does, I do think you got to be looking at gold at this level. Because once again, what I'm personally seeing is gold and the dollar start to behave a little bit more rationally with one another, which means this, Chucky, for me, and I'm just talking about me. What that means for me is if support builds, and that's a hypothetical right now, but if support builds here and we get that nice support build from around that 1800 level, I think you can start moving into gold products with a little bit more confidence than what we otherwise have been analyzing over the last month or so, as gold has been choppy, and quite frankly, as gold has been extremely choppy over the last 4 to 5 months. I'm finally starting to see some consistency here. And because and again, I'm just talking about me personally, I'm not talking about anybody else out there. For me, because they're now starting to get a little bit more consistent, I'm starting to see a little bit more. Let me put it like this, Chucky. Typically in a trend, I can project out multiple waves. Would you agree with that, by the way?
Yeah, sure. Absolutely.
Okay. In gold, I haven't been able to project out more than like one single price movement with any degree of confidence. Support holds right here. I think that changes. And that does interest me. And it interests me not only for gold, Chucky. It interests me for like GDX, the gold miners. Gold miners sitting at support 33, looking at a potential reversal. It interests me for other metal stocks like Pan American Silver Company sitting on the 50-day moving average, or Newmont Mining forming a little bit of reversal analysis, or KGC, which is my favorite technical chart in the gold market here, fighting for a little bit of slowing momentum and confirmation. And so I think it's interesting here, this pullback in gold. And again, it is choppy, it's volatile today, it's crazy today. But once again, the consistency is coming back in the analysis. And I think as the consistency comes back in the analysis from a technical perspective, the confidence starts building, in my opinion, as well. I think gold's interesting here at 18, around that 18 to 1810 level. Let's see support build, because you can't buy into the face of the dam breaking, and that's what happened on gold today. But again, I like the consistency behind the price movement, and if gold starts forming support at a known level where it should form support, I think that's going to be fairly interesting, in my opinion.
All right. Let's transfer to stock chalk. And once again, one last comment on gold. I just have other central banks being more hawkish than the dollar. That's all I need to know for gold, aside from the inflationary stuff. I'm more interested in gold than I've been in a while.
Not in the face of that type of candle, but again, it's the zone and it's the analysis going into the zone that certainly does interest me.
Oh, give me 3 more candles like that, then I'll get really.
Wait a second, hold on. If you give me 3 more candles like that, I'm just like, gross. No, you got to form support here. That's what you got to do.
Let's transfer to stock talk. Okay, listen, Jay Powell's going to be Fed chair for another 4 years, Matt.
Our overlords or the consistency in our overlords is confirmed today. Yes.
So listen.
I don't have anything to say.
I know, right? Like I'm trying to be like
I don't
we got
want
some nice, respectable people here, and so I'm not going to say much other than. Yeah.
Well,
does it have any real
congratulations to Jay Powell for achieving another 4 years of running the central bank, and hopefully at some point he finds his hawkish heart.
Hopefully at some point he doesn't get fired as a scapegoat. Or
Oh,
maybe
no. Wait, hold on. That is absolutely going to happen. Yes,
not
but
our
again,
fault.
we'll break that news in 18 months from now.
So listen, little algo thing, but that's settled
Yeah.
now. J-Pal going to be, does it have any market ramifications, Matt?
I don't think so, Chucky. I really don't. Jay Powell, I think over the course of the last couple of weeks, there was some early chatter about Brainard, but again, to go from voting member to skip vice chair all the way to the chair in an environment where we're still in economic recovery, typically politicians will take let's see the consistency route here. And so it wasn't surprising that Jay Powell did get another term. And if you're the president of the United States and you want somebody to support stock market, you found your right guy in Jay Powell. I'll tell you that.
Let's get into Matt. Short week. Economic reports you pointed earlier are going to be on Wednesday. Don't have a lot of earnings. We've got like Zoom. Not a lot on the earnings calendar. A couple things. John Deere, I believe, is this
Deere
week.
action.
Yeah. But not a lot on the early calendar. Really light week, probably from a news standpoint. Probably, a lot of technicals take over. Do you got anything else before we transfer into sectors?
No, not a lot on the docket here on a Monday morning regarding stocks in the news. Zoom has earnings today. It's fascinating that on a day where, the economy is, I would say, struggling a little bit. The economic analysis, the economic recovery trade to a certain extent. Zoom was the stock that led the charge on all of that. For those of you who don't remember the early pandemic trading, but it was Zoom who caught on fire, and they were a Tackle 25 dirty, sexy money candidate during 2020, went upwards of like 350%. They have just struggled mightily ever since. And I'm not going to say it's because we did remove them from the Tackle 25, but yes, we did remove them from the dirty, sexy money candidate list last year. Zoom's breaking support in front of earnings, and that's certainly concerning. But I mean, that should just tell you how much lack of confidence that the underbelly currently does have, where the economy is struggling, the economic reopening play is struggling, and yet Zoom, which started the pandemic response from a technical perspective, that can't catch any momentum, like at all. That's got to be a little concerning, no doubt about that. But outside that, Mark, it's a light news week, and don't expect a lot of fireworks from an individual stock perspective.
Well, I do know there's a lot of interesting things going on patterns in sectors, and sectors are so important. And after I get you started, I gotta restart my computer, my interactive brokers. I'll be back in a second, Matt.
Yeah.
But sector spotlight. Listen, identifying in 2021, there's been a couple storylines from a big picture standpoint that the relentless buy the dip on broad markets, S&P, that's been what story. The other storyline has been sector rotation at different times. Getting in on different sectors, I mean, just looking at tech where you're going to start, Matt, getting in on different sectors on clean breaks, clean bullish signals, that's been consistent in 2021. The market has been relentlessly up, but it's not always been every sector at every given time. There have definitely been leaders. And looking at patterns in sectors, man, if you've been able to identify when certain sectors are about to run, that has been extremely worth your time in 2021, and has been pretty profitable too. So sector analysis on Monday is always a mainstay on the halftime report. And Matt, I'll be back in a second, but where are you going to start off today?
Go ahead and restart your computer there.
As he restarts that, I'll fill in what he's going to say too.
Yeah, I was going to bring Gino in here, Gino, because when Mark's talking about that, the rotations we do see from a sector perspective, obviously our community is going to start with the Tackle Trading newsletter and how we do all of our rankings. Gino, can you kind of just do a rapid fire recap of the upgrades and downgrades and the importance of making sure you're going through the newsletter on a weekly basis?
Yeah, so Matt, the newsletter, like I was talking about in the lounge this morning, is there is no reason to be in the lounge unless you read the newsletter, because honestly, if you're not reading the newsletter, you're missing the main.
Not on a Monday. On a Monday, you need to read the newsletter before you go.
Gotta have it. Comes out on the weekend, and my system personally, over the last almost 23 years of trading, if somebody said, what's the most important thing to learn about analyzing, I would say you better focus on sectors, especially this weekend. The title of the newsletter was Markets Mixed and Sector Specific. Now, that was a very, very thought out title. I spent time thinking about that, and I've used it many times before, because when the NASDAQ and S&P are breaking out, but the Dow and Russell, which the Dow's got some big names in there, but the Russell has the small names, they're pulling back and they're not coinciding. They're not running relative to each other. That's odd. That means you better find a good sector. What's leading the market? Is it growth value, or is it a sector or industry? Also, there's times when you get advanced decliners where the market's up, but the decliners are winning, or there's new highs, lows, and there's more lows than highs, but the market's at a high. Anywhere there's confusion, again, in the market's mixed, or the indicators are mixed, or the internals are mixed, that means you better be sector specific. And to make life easy, it doesn't matter what the market's doing. You're always better off being sector specific. So what we do, Matt, and you and I put a lot of time in this, the team puts a lot of time in this. We break down the sectors. We look at the big players inside, not just the team. We look at the individual players, and we throw it on the gridiron. And right below, usually somewhere in the newsletter, in the first paragraph or two, I actually put sector focus. I think it's the most important part of the newsletter. And I'm just going to read you the first couple sentences. 3 of the 11 S&P 500 sectors closed higher. Energy had the biggest pullback of 5%. That was a big thing to think about. That was the biggest vault move. Only one upgrade on technology. The top 2 sectors leading the market are discretionary and tech, followed by materials. So if you had to go scan for a bullish trade, you're done. You just scan in tech, discretionary, and materials, and the odds are in your favor, period. And you can see that on the gridiron. Matt had it on his screen here a minute ago. On the gridiron, you can just go to the right-hand side of the screen. You see the S&P. You can see that the discretionary and tech are leading it. That's where the strength is. Now, you can also see in third place in cyclicals is materials. So you're getting all the coaches in the team analyzing this for you over the weekend. So you can take the weekend off and come in early Monday morning and say, okay, where am I screening? Or you can do it during the weekend, set yourself up. Or if you're just learning, practice trading on our stock and options report, because this is what we're using to pick our trades, and then go to rapid fire and we all pick our favorite. I don't think there's a better system out there, or else I would be showing you it. So yes, sector specific, and really technology and discretionary are leading the markets.
And can I jump in there, Gino, on as you're detailing that tech and discretionary and the leadership of the market? When you're, and I just want to catch up technically with where you're at from a discussion point, Gino. When you're looking at these 2 sectors that have really led the marketplace over the course of the last, say, month and a half, as we've seen that bullish charge take over, you're looking at discretionary, you're looking at technology. And, a couple weeks ago, it was tech catching up to discretionary. Discretionary was kind of leading the bullish charge there, as it was tied to Tesla, obviously. But once Elon started selling some shares and started playing some games on Twitter, you saw the volatility in Tesla start to pick up. Yeah. You also saw that volatility in XLY here, which is the discretionary sector. You saw that pick up a little bit as well. Ever since that little mini pullback discretionary had, technology kind of overtook it. You see the same pullback, but it gets just absolutely gobbled up right there on the momentum trigger of the 90 MA, and then it just starts to drive. And so you're looking at both discretionary and technology that are doing fairly similar things, very similar volatility. Technology ranked slightly higher just due to not having the volatility that discretionaries had as tied to Tesla. Technology did overcome that and is the highest rated sector at tackle trading. Now, with that said, you're a little bit range up here. And I do think going into a week where you're going to have less trading volume this week than you typically do. Would you guys agree with that, by the way? Welcome back, Mark.
Yep.
Yeah.
No, I mean, volume hasn't exactly been robust to begin with, right? But
but on a holiday week like this week,
there are 2 weeks you see really low trading. The week between Christmas and New Year's, really
which is
low volume.
The worst one, yeah.
And then Thanksgiving week, really low volume.
So we're going to see a little bit less volume, which means we can see a little bit more random price fluctuations, in my opinion. And as we are 5-6 bars upwards fighting against a breakout, I just think we could see some consolidation there. But overall, both sectors are fairly healthy. The concern in the growth areas of the market has certainly not been tech, and it's certainly not been discretionary. The concerns have all been about communication. One of the only growth sector to get downgraded at tackle trading over the week was communications. Yeah. It's actually ranked right there at the 50 handle, and as we discussed with Gino on the actual scoreboard, you see this little blue dot all the way over here? You see that downgrade there? Well, that's communications. Here's the other aggressive sectors. That's the separation you have seen over time in the communication space, and that continues here. And Mark, you do have some leadership at the top of the communication space. Obviously, Google fighting that $3,000 breakout channel. You've had Netflix carry the baton, but both of them are showing a little bit of weakness at the top, and that's concerning given the fact that the bottom of this market, the Disneys of the world, the Comcast, CMCSAs of the world, the Verizons of the world, the AT&Ts of the world. These have been in some hot water over the course of the last few months, and I just don't believe this sector can really get going in some degree of consistency to the same degree that technology has, to the same degree that discretionaries had, until you see the bottom of this market solidify itself. And we're just not there yet. We may be in the early stages of being there, but we're not there yet. It's got a lot of work to put in. So comms, and it's a little surprising, comms has been such a fantastic sector along with technology and discretionary for a long time now. Even before we had communications, this type of stocks in this sector where you had some high flyers, you had some value, you had some separation there, but it was a fairly consistent sector alongside discretionary, alongside technology, but that just is not the case right now, and it's going to take some time to get communications back in a line. From the, Gino, you mentioned a little bit of the basic material sector, and this is what I was talking about, tackle trading community will remember this. Down here in this choppy area, I remember talking about materials, and I can't tell you how many times, Mark, I said, listen, this area is not gonna fly until the bottom of this area starts to participate with the specialty chemicals, with the building material companies. And then once you started seeing silver form bottoms, gold forming bottoms, metals forming bottoms in general, once you started to see stabilization in Lynn, Sherwin-Williams, these specialty chemical type companies, all of a sudden you started seeing a more consistent bullish environment. That's what communication kind of needs to do here. It needs to get more consistent. Materials, that is consistent. It's our highest rated sector right now. in the cyclical areas where you're dealing with industrial, basic material, energy, and finance. Downgrades in energy, downgrades in finance. We're seeing those. We talked about that on Friday as well. The cyclical areas of the market, the economic reopening ones, they're a little concerning right now. Finance and energy, chiefly among those two. Industrials kind of just maintenance mode as it's fighting that breakout here. And again, no downgrades here. You got downgrades in energy, you got downgrades in finance, no downgrades in materials, no downgrades in industrials. What's the difference? Nothing was violated. Nothing was violated. Just simply because something doesn't go up doesn't mean it gets downgraded. You got to see a little bit more prolonged. Now, if we stick in mud for another week here, you might see a little bit of downgraded off industrials. But as of right now, industrials still trying to hold the breakout channel. Basic materials still in a fairly consistent bullish uptrend with confirmation here today against that bullish retracement. You see that on the intraday chart. Look at that fairly consistent 30-minute chart. We talked about this on Friday. Pound the table there. Look at that confirmation right there. Pound the table. Let's see a secondary move there in the material space. But for the most part, I think the most confidence you have in the cyclical areas is materials right now.
Right. And Matt, to make your point also, and what I was talking about earlier is, we weren't seeing the internal strength on communications. And I'm looking at the top 8 companies in that sector. And only one is barely up, and that's Facebook. It was down a minute ago. So basically all the top 8 were down. It's just money's not flowing in there. Then when you look at materials, I'm looking at the top 7 or 8 there. Almost all of them are up except 2. So you can see that money flows into the entire sector or it doesn't. It's very sector specific. It's about, are they buying that fund? Are they buying that space? Where's the money coming out? And it's just apparent when you look at that. And it's clear as night and day. And really gives you more confidence in your trading when you see that. So I can't stress enough that you guys really dig deep on that newsletter, dig deep on the gridiron, and really pick your sector first before you pick a stock. Because honestly, I like some of the setups in communications going, and we were looking at these on the newsletter. There were some good setups in there, but they just had the momentum behind them because the sector was weak. And now we're seeing that. We're seeing what happens.
Yeah, there's a couple stocks that have some decent setups.
I like that. I like that chart a lot.
Oh, and the material chart? The material chart's really nice.
I would like, while you guys were talking, I was like, I like that chart. I need to do some scanning.
Well, if you want to do some scanning, it's called the Tackle Trading Options Report and the Tackle Trading Stock Report over the weekend. There's a couple. If you want to find the best material trades out there in the marketplace that are consistent technically, you start with Tackle Trading's Options.
I gave you a softball. I was hoping you'd hit it.
Oh, our rapid fire is doing pretty good.
I switched bats. I went left-handed and I hit that one.
No, it's a pretty chart. Listen, and check out those option and stock reports every weekend. We collective group, we get together every week and we try to find in each of the sectors where, even when tech is strong, we don't just give you, here's 85 tech trades. We scan through the sectors and look at, the different areas to find out what are good setups in each of the areas.
Well, and honestly, and when you're looking at the growth areas, I think you could pretty much rattle off your favorite trade in any sector if you're doing your scanning appropriately. When you're looking at the technology sector, for example, tech here, obviously good momentum, increasing momentum, a little bit range up. Well, in the tech space, what about Taiwan Semiconductor? Don't you have to be slightly interested in one of the best semiconductor companies in the market today that's breaking out of a right shoulder?
I love, those are weekly candles. If you didn't see that up on the chart, so you're dealing with a multi-month potential breakout, fundamentally strong company, man. It is hard not to try to put together a trade.
Pretty simple analysis, quite frankly. When you're looking at discretionary and KMX, Coach Tim's favorite trade from the rapid fire section, nice deeper bullish retracement coming into the old breakout channel with confirmation, easy trigger above 150. Pretty simple analysis, right? Pretty simple analysis. Yeah. Comms, I can't do that. There's nothing in comms from a theme perspective. There's nothing in comms from a consistency perspective. It's choppy. It's volatile. The stocks at the top end of the range are showing a little bit of increasing volatility and concerning technicals. And the stocks at the bottom of the range are having a one-day reprieve where they've been dealing with prolonged bearish downtrends. There's literally nothing to see there. And I just wanted to show that as an example. Don't fight the action. If comms let me put it like this. If comms literally isn't, the heavens, the earths, and the stars are all aligning and showing you a fantastic price projection to the upside, it's a stay away. And as of right now, comms is just a stay away. As for the defensive sectors out there, not a lot of activities happening from the defensive areas of the market. Healthcare still stuck in mud as it's done over the last couple of weeks. When you're looking at real estate still stuck in mud a little bit, fighting against that breakout. That breakout certainly could be traded once we do get it. When you're looking at staples, did not downgrade Staples, but still maintain that ranking. And Staples looking like it wants to break out. That looks interesting as well. And utilities is just kind of just hovering up against that breakout channel. So not a lot of upgrades, downgrades in the defensive areas of the market, really just some stabilization in the defensive areas. The movements that are happening here is you got an upgrade in technology, discretionary, maintaining the consistency despite a recent rise in volatility. And then in the cyclical areas, you're really talking about industrial stabilization at the top end of the range, maybe a breakout you look to add, but it's really the materials area with confirmation today.
I love sector breakdown. I literally use it, and because I get this inside view of we discuss it on Friday. Gino puts out the newsletter every week, breaking it down, adding in a commentary and numbers to it, and then here on Monday. I mean, this is a staple part of my personal routine, and I piggyback off all of the fine work that people do and the analysis they have, and it helps me make decisions in different areas.
It does.
And I just implore people, listen, top-down analysis, looking at this, it is worth your time. It has made traders money in 2021. And check out those scouting reports. Check out the newsletter Gino puts out every Friday, the Tackle newsletter, and sign up for a free pro trial if you haven't already. You can go to the store tab at tackletrading.com. Sign up for that 15 trial. We have an amazing community, amazing education. Come give us a shot.
And also, Mark, just to add to that, we're really proud of our screener. We don't market it as a screener that you can buy, and there's so many screeners out there you can buy and so many softwares out there. This is a very basic one that's been time and tested and true for the ages. It's sector specific. Basically, you just go down to our broad market sectors, you click on the sector your favor. We've already filtered out the non-liquid ones, the ones that don't have options. We put the best trading ones in that sector, not just from the S&P, but from other indexes. They're all filtered out and thumbnailed for you. It's really fast. It's convenient. And honestly, if there's something out there better, and I've been searching for 20 something years, I would use that. But this is more convenient. It's not no fancy algorithm. Beginners could use it. It's basically just our newsletter screener below the gridiron. Use it. Let me know what you think, because I still use it. We all use it here. And Mark nailed it when he said sectors is where it's at. So anyway, I just had to put that in there. If you don't know how to use it, check out our lounge. I'll show you how.
Now, Matt, do you got anything else before we go into Gino's Gem?
No, I'm excited for another Gino Gem today.
All right, listen, every Monday, we started this several weeks ago. This is just an interesting little segment. And really, honestly, if you're new, but even if you've been around a long time like Matt and myself, breaking down, because there's so many little gadgets, indicators, tools that are out there in the market for traders to use. I mean, we got a plethora. We don't have any shortage of that. I love Gino's Gem because Gino takes some little aspect of the tools, the inner dynamic workings of tools and indicators and all of that, and he breaks it down and he brings you one aspect to use each Monday, and we call it Gino's Gem. And it sounds like we're going to talk about something to do with the VIX. Have you came up with
Yeah.
Vixie Vicky? Where
You know, I was trying to make it more interesting than it is. This is actually an old option trick that I've learned from other option traders. And this is just one of many indicators. Again, guys, I have so many gems and things I use to make life easier. I call them trader hacks. The boys at Tackle say they're Gino gems, but I've picked them up and found them throughout my trading career, and I like them. They work. You know, there's so many, you can't look at all of them every day, but I like this one because I don't know, Tyler and I were talking, and it's one that he uses, and a lot of major option traders and cash flow traders. So what I'm showing you here is I'm showing you the S&P. The S&P right here, SPY. I'm just going to use the ETF here. Very similar. You see this gray box here? That's 1110. See that gray box right there? That's 920. That 890. I'm picking these little swing lows. Now, what's unusual about these little swing lows here? These are market pivots, and you can call them pullbacks or bottoms that I predicted. And that's not really me, it's my indicators. And they're very, very easy to predict, and I'll show you how I did that. Now, you can't predict them all the time, but the majority of the time. If you can do it the majority of the time, that means the odds are in your favor. So how did I pick these pivots? Now, when I say I picked them, that means when the market was on this red candle right here, or right here, or right here, all these signals, the odds were in my favor to buy on the dip. They were in my favor to do, well, this might be the bottom. Now, I have a 20-day moving average in here. My system, I don't buy anything until it gets over the 20. So even though it says market bottom, I still wait till the market gets over the 20 on directional trading. But my confidence on buying on the dip, because I've used this indicator so many times, and I'll show you what it is this is the S&P, like this one was the last one right here, is there's extension, overextension bands. This is too big of a move. This is going to go up. How do I know? Well, there's one indicator we talked about earlier. Now, this 20-day moving average is just showing you the trend line because it's kind of daring to buy on dips below the 20. And I put the dates on here when the signal came in. Is one thing people use is a Bollinger Band. They come in here and they say, you know what? Let's use the Bollinger Band. And you can see here that anytime the market got below the Bollinger, it was a good time to buy. Now, it didn't get on here. It didn't grow here. It didn't quite cross it here. It did here. So sometimes when the market gets below the Bollinger Band, and it barely did here, and it didn't quite here, it might be a signal that it's overextended to the downside. You might want to play the bounce. But what we do is, I don't use the Bollinger Band on the VIX. A lot of people do. I know that's one thing you can do. So when you're looking at that Bollinger, how do I pick it? How do I pick the signals? You find something that works in relation to this or the inverse. So simply, what does the opposite of the spider? The VIX. You put the VIX on there. Now you'll notice the VIX, when it peaks up here, this is when the market's bottoming on those same dates. But how do you know when it's peaking? That's where you put the Bollinger. You put the Bollinger on the VIX. So I put it on here. You can see, and let me get rid of this little indicator down here so it stands out. You can see here, anytime the VIX is outside the Bollinger, and here it's twice, and right, anytime it closes outside the Bollinger, there's a very high odds that the market's going to reverse. So the VIX is going to close outside the Bollinger more than the S&P. The VIX is going to extend because it's more volatile. And really what it's meaning, if you want to get analytical about it, is option prices shot up. They're buying a lot of protection, and they're getting too expensive to buy. So they reverse their action and they come back. So basically, most of the time, not all the time, when the VIX is outside, here's the last one right here, the market is going to put in a pivot. That's where I do my bull puts. That's where I start to invest in the stocks that I think are bottom fishing. That's where I start to put in my credit spreads. I don't really go directional. And then I wait for a confirmation. Now, right now, with that said, where are we at on the VIX? We are We have not closed outside. I need this to close outside up here before I call it a pivot. So going back so you can see what that looks like, I marked all these on the SPY. Those are how I picked the bottoms, by looking at the S&P. So simply throwing a Bollinger Band on your VIX. That is the Gino Gym. You can see it here. It's been back tested. It works the most of the time. When I say most of the time, I can't say all the time, but a lot, almost the vast majority. The odds are sick how much this works. So there you go, guys. Like this one did not close outside the VIX. That was not a signal. And as soon as it turns red and comes back in, you get your confirmation candle on the S&P. You're good to go. There's your credit spread or whatever strategy. Now you're a bottom fisher, an overextended. You can pick that pivot on a swing low. That's it, Mark. Hope you like that one.
No, that's really fascinating. Will you put that chart back up, Gino? I have a question just for my own personal. Like if I wanted to set those settings in Thinkorswim, like how do I make my chart look like yours?
So simply, all I did is I went to study and I just found, or you can just go in here. You could go in here to the beaker and you could type in VIX or Bollinger. And his Bollinger Band's right here. You double click on it and you don't need to change anything on it. Just leave the basic one there. I'm just going to do it so you can see it here. Hit apply and it'll be on the chart. Now you can change the colors of it and everything you want. But you know what's interesting about this, Mark, is it's one of my major indicators down here in the market internals. See down here? I just leave it on there. On my market internals with the tick and everything. I have it down here. So I'm watching it on a daily chart. And anytime it gets over the top of that Bollinger Band, I keep my eye on it. You know, the gray box I put in there for the visual. But that's it. When it gets a close, you need it to close. It's amazing how many times it predicts. Now, since the VIX is the volatility of the S&P, it works really good on the SPX. If you want to do the NASDAQ, you want to use the NASDAQ VIX. If you want to do the Russell, you use the Russell VIX. But they're very, very similar when they move hand in hand. And what's interesting about this, Mark, is this closed way above the 20-day moving average, but it predicted the pivot right here. You know what I mean? Even in a bullish pullback, it told us it's going to pivot right here, which means you could kind of go, okay, let's play this swing right here. So it just lets you know the market's going to go in a certain direction. And anytime you have an edge on picking market direction ahead of time, it's a huge help on planning your strategies. It really is. Anytime you can predict anything in the market.
No, and if you ever want to dive deeper in, listen, Gino is on the lounge at least once a week. You can come to the lounge, ask him more questions. The lounge is designed that basically any question that you have, whether you want to look at a chart, you want to go deeper into an indicator, come check out the Traders Lounge, 11 a.m. Eastern every day that the market is open on tackletrading.com. All right, good show. Good standard show going over the markets, the sectors, the different areas. I love the Monday show. You know, I like being on the halftime report on Monday because I would probably watch it anyways because of all of the start of the week information. So I might as well be here anyways, right? To participate in the action. Listen, Gino, got any final thoughts for the market as we head into your theta giving week?
Yeah, I will be on the lounge Wednesday, and I'll be on the coach's show tomorrow with Tyler. We got a lot of good stuff to talk about. I like to build up the theta. Yeah, they build it into the price. You know, they everybody says that theta is already built in. Positive theta, cash flow. I love it because, you know, usually this is a bullish time of year. It is a half day on Friday, so I don't even count that day. So the market doesn't usually move that much. So really, it's like 4 days off of the market. Again, you can pretty much predict the market's not going to be that volatile for 4 days. Great for positive cash flow out there. Mark, you're a cash flow trader too. You know, we like to take advantage of the days off because, again, we know which way the market's going. Nowhere.
Listen, and you can catch Gino on the coach's show tomorrow night, or as he mentioned, on the lounge.
And real quickly, Mark, just have to brag. The rapid fire on the bottom of the newsletter, guys. It's been killing it. My Peloton triggered looks good. You guys, there's been some really good trades on the rapid fire. That's where we all put our favorite picks in there.
And if you don't know where to find Rapid Fire, go to the Tackle Trading newsletter, which you can find on the reports tab. Go down to Tackle Trading, the newsletter. Little video segment we do every week where the coaches take their favorite bullish and bearish pick from the newsletter, from the stock and options reports. And we just give a little commentary on it at the end of a long work week. I also liked Peloton to the downside. I liked Gilead to the upside, both of those triggering today. Matt, final thoughts heading into
thank you, Gino, for another great edition of Gino's Gems. Really appreciate that. Tonight, I will be doing a Tackle Trading 101 webinar on swing trading. So if you're interested in learning a little bit about swing trading, come join me tonight on Tackle Trading's YouTube channel at 8:30 Eastern Standard Time. We're going to have some fun. Plan on about, I would say 60 to 90 minutes in that course, that class here tonight. And there's very few topics I enjoy more than introductory swing trading topics. I love teaching the art of swing trading and the analysis that goes in with swing trading to new traders. And obviously our pro members have probably heard me talk about these concepts a time or two. But would be more than happy to see pro members come hang out with us on YouTube as well. Always love the pro members.
And do not forget that webinar. You can find it right here on the YouTube channel, Swing Trading. Looking forward to it. Listen, good, solid show. Everyone, we love you out there. Short week, but we'll be with you while the market's open, both in our pro community here on YouTube. So, have a good trading week. Look for those signals. Look for those opportunities. Broad market charts still pretty healthy. Just do it responsibly. Trade responsibly, like we always advocate. But have a wonderful Monday, Tackle Trading community.
See you tonight, Tackle.
Take care.